Hi, I'm Rick Kaler. Thanks for joining me. If you're looking for a heart-pounding roller coaster ride into the uncharted territory of financial wild things, forget boring old S&P 500 returns. Look no further than the shiny new Bitcoin ETFs hitting the market. Or maybe not. You may have seen ads for the newest, easiest way to invest in the cryptocurrency Bitcoin through exchange-traded funds, that's ETFs. They're offered by Wall Street giants like Financial Templeton, Fidelity, and BlackRock. The funds hold the digital token themselves, meaning any money you put into the fund will buy Bitcoin directly. Your returns will therefore follow every dizzying peak and stomach-turning dip of the crypto roller coaster. A Bitcoin fund that's managed by a reputable brokerage firm, like those I just mentioned, may provide an air of respectability. It may make it easy for ordinary investors to own cryptocurrency without necessarily having any idea what a blockchain means or what a digital wallet is. But that doesn't make Bitcoin an investment instead of a speculation. Investments, by definition, offer ownership of something with intrinsic value. Think of tangible assets like South Dakota farmland or gold, ownership in companies like the S&P 500, or even an original painting by Picasso. But Bitcoin is just lines of code floating in the digital ether, backed by hype and speculation. Bitcoin could be in contention as the mother of all speculations. Now, why? I mean, right now, some of you that are fans are asserting, and I would say correctly, that someone who had bought it in the mid-2013s would have enjoyed a 2,500% return by the end of 2023. Detractors like me shudder at its lack of tangible existence or government backing and its tsunamic volatility. For example, it crashed over 70% in 2018 and 65% in 2022. That's enough to make the bravest investor wince. By comparison, the S&P was down a paltry 4% in 2018 and 18% in 2022. But then Bitcoin soared a mind-boggling 307% in 2020 and 155% in 2023. And comparatively, the S&P, it was up a boring 18% in 2020 and 24% in 2023. Here's my point. Any currency that makes the stock market look boringly stable is no currency, much less an investment. Well, I do believe that eventually Bitcoin may mature into a stable currency that would be widely accepted and used in transactions around the world as a currency. I may not be alive to see that, but time will tell. So here's the thing. These new ETFs open the door for everyday folks to dabble in this digital frenzy without diving headfirst into the crypto rabbit hole. There's no need to wrestle with exchanges or fear hackers or many of the other things that are associated with Bitcoin. It's speculating in Bitcoin made easy, and I would suggest perhaps too easy. The SEC, bless their cautious hearts, warns that these are highly speculative investments. Wise words, considering Bitcoin's volatility could make even a roller coaster operator blush. The SEC's suggested maximum exposure is 5% of your portfolio. I would suggest that's an allocation for wild-eyed gamblers. I would suggest a 1% holding for those with a strong case of FOMO, fear of missing out, and a 0% allocation if you are an evidence-based long-term investor. Remember, too, that the IRS doesn't treat Bitcoin like dollars or other currencies. Buying and selling a Bitcoin incurs the same capital gains taxes as stocks, which means those wild swings could land you a pretty hefty tax bill. Calling Bitcoin, they also can give you a significant write-off. So, as I was about to say, calling Bitcoin an investment strategy is like calling a lottery ticket a financial strategy. It's a gamble, pure and simple, one fueled by hype, speculation, and a dash of digital snake oil. If you're looking for a dependable store of value, look elsewhere. Maybe at a diversified portfolio of real assets. Cryptocurrency is the circus sideshow of the financial world, dazzling and dangerous in equal measure. So my recommendation, just watch the show from the sidelines. The entertainment value is likely to cost you much less that way. Thanks for listening.